Hi, everyone. Thank you so much for joining us. We're due for a great session with three incredible people. I'm just going to jump into it right now. Lucy, we keep hearing that sports are the new gold rush for institutional capital. From your seat, what is actually driving private equity and family offices into this space right now?
Great. Well, thank you for that question. I hope everybody can hear me okay. My mic was riding up a little bit, so I was fiddling with that, so hopefully this is okay. So we represent a lot of family offices and our institutional investors, and what we're seeing is that sports has become, or has sort of altered its form from being more of a vanity acquisition to this really supercharged business ecosystem investment, right? So if you kind of step back and think about sports, it kind of hits the trifecta, right? It's scarce, it's stable, and it's scalable. So there is a limited number of teams available. There are 32 NFL teams, right? So when a team becomes available, it's hot, everybody jumps to it. The global demand increases, but supply really is not increasing. It is also stable in the sense that we all watch sports, right? Recession doesn't really impact sports fans as much, right? And with all these great live TV deals, streaming deals, sports are creating this sort of like recession-proof stream of annuities that investors love, and their scalability. So from a tax advisor's point of view, I say, don't look at these guys as teams, right? They're a business ecosystem that hits this trifecta, that's packaged in this really nice packaging of tax benefits and strategies. A lot of my PE and family office investors love the losses that flow up to them. Even though the teams are generating profit and cash flow, from a tax point of view, we can create paper losses, which is great because you make money, but you don't pay taxes on that, right? And then, so we always just sort of say, think about it as an ecosystem, which is why I think it's creating the gold rush effect. And I think so, if you kind of look at private equity investments, I think the former panel talked about cricket. Blackstone is sort of a master class in this, right? So they didn't jump at the first NFL investment opportunity. They waited. They invested into a cricket team for about $1.78 billion, but they didn't stop there. They also invested into this live event performance platform. So when you combine those two together, you're creating the ecosystem, right? So now you've got this vertical empire that is taking advantage of everything around sports, sports in the center, and everything else around it. So I think this is why we have this gold rush of investment into sports.
Speaking of investments in sports that we love, Mike, what are you building with the US SailGP team, and what made this a compelling investment thesis for you personally?
Yeah, I competed as a professional sailor for 20 years, and I always kind of considered myself an outsider to my sport. I didn't grow up sailing. I grew up, following other sports, playing other sports, wanting to be Michael Jordan or whoever the athlete that, kids looked up to at the time. And sailing never really had a place for that, right? It was more of a hobby. And Larry Ellison created this league called SailGP. And the whole premise was to create a commercially sustainable professional sailing league. In the docuseries that just came out on Paramount Plus, his opening line was, "I want to create the greatest sports league, period. Not the greatest sailing league." Big words, but Larry's has a track record of turning big dreams into big realities. So for me, as I was getting towards the end of my career, I saw this opportunity, and we bought the U.S. team from him in the end of 2023. We brought in private equity, which was the first in our league, and that really sort of set the momentum in, they'd already built this league. It was 4 years old at the time, but when private equity came in and did the proper due diligence, suddenly it went from, oh, this could be interesting hobby, this could be a passion play, to this is a business that we can invest in. And since there are 13 of the 14 teams in SailGP are now privately owned, multiple family offices, private equity firms have all come in. But what we really liked about it is a little bit different than what you were saying is there's a spend cap in SailGP. So Formula One introduced that a few years ago. And 5-6 years ago, you could buy a Formula One team for pennies on the dollar because they were losing hundreds of millions of dollars. And they put a cost cap in, and suddenly, today, all of those teams are worth, I think probably the least valuable team is $2 or $3 billion, and some of them are $6 billion. And so we liked that in SailGP because we knew what our worst case was. Our worst case was $10 million, which we knew we could get to in sponsorship, and have a cash flow. Have a positive cash flow, which is very unique in sport, right? And that's what makes it exciting for us is we know our worst case, we know we can get there, and we know what the carrot looks like in the distance for media rights and things like that.
That's incredible. Lucy, when a deal gets structured, whether it's a minority stake, a fund, or a syndicate, how much does tax planning actually shape the terms? And where do you see first-time sports investors get it wrong?
Great. So we just talked about this in the backstage, and I was saying, everybody says they hate taxes. No. What you mean is you hate paying taxes. Everybody loves saving taxes, right? So I always think that tax planning is such a critical component. You don't have to be a tax geek like me or my 4,000 colleagues at Citrin Cooperman to appreciate the power of taxes. We see it every day, right? We see that taxes can actually make or break a deal. So it's not just an enhancement, but it can actually make or break it. I mean, I've seen $100 million deals fall apart because somebody didn't think about a tax consequence. And this is why smart money always brings tax advisors to the table from the get-go, right? As they're working out the term sheet, they bring on tax advisors to work out, is this debt, is this equity? What does the distribution waterfall look like? What am I getting from this? Like, what are my expected projections, right, on sort of losses that I might be able to take advantage of? Lots of different plays there. So this is why I always say, first step back and build out a playbook. You need a tax playbook. And then from there, develop blueprints on execution points, right? So you're revenue positive, which is fantastic. You don't want to be taxes on that, right? So let's get smart and let's plan ahead. And I think one common mistake I see investors going in, especially guys who are maybe in the more traditional tech space, as they go into sports investments, they think it's the same. It's not. Sports teams, sports investment is so different, right? So the whole Section 1202 play, which is the qualified small business stock, is kind of like the holy grail because it's where you can draw in investors, give them an exit with a $15 million exemption and gain. So that's a pretty great thing. It doesn't really work in sports. For all the reasons why we love sports, high valuation, for example, it breaks 1202 strategy. So you have to think about it differently. I'm not saying 1202 is dead with sports teams. It's not. It's not about the team. It's about the tech. And so sidebar with me, and I'm happy to share more details on that. But yeah, so I think tax playbooks are really important. I think tax planning is really important, not just for the investors, but also for a lot of you here who are founders of companies. Especially for you, you really need to develop a playbook for your company and how you plan to exit as well.
Super. Vic, you're building at the intersection of technology and sports media. How are investors thinking about content infrastructure and IP as a core part of a sports asset's valuation today?
Yeah. So when you take a step back, like a sports team, a league, is a media company that's monetize their IP in like a very different ways, and hopefully become profitable so that they can pay like they can save on taxes. Like you have several ways. You have like partnerships, media rights. Obviously, historically has been like the biggest driver, and then you also have to, digitally speaking, like reach as many fans as possible, like to bring them to your events, to sell them merch. So everything in sports is media related. And the opportunity that a lot of the investors, whether it's private equity or VCs for like emerging leagues, is that with technology, you can make this IP much more scalable and much more monetizable. And the way to do that is to leverage technology. So basically what you want to do is being able to produce content at scale without raising your costs significantly. So you need to have ways to maximize your content production. And once your content is produced, you need to maximize your distribution channels. And so that's what we tried to do. It was trying to centralize all the content that is getting created around the live events, and then use AI to produce faster highlights, clips, index, tag automatically when a seller has been detected, when a brand has been detected, and then you can provide that content to those different people. And that way you reduce your production cost because you need to produce less content, and you maximize your distribution. And I think that's something that investors understand better and better because they are coming from, a lot of them are investing in tech companies. So they want to treat those sports teams and those sports leagues almost as tech companies that have to have scalable ways of monetizing their IP.
Can I just add something quickly?
Yeah.
Vic, I love what you said because sometimes I think about sports teams as an investment in media tech with the real estate play. And you still get social capital bragging to everybody else that you own this great team, but that's exactly the way I think about it too.
I think that's something that's changed. People, in the last few years realized that sports IPs were some of the most undervalued assets because of that reason, that they were focusing a lot of the performance, which is great, but they were not like their IP as a real business that could scale. And I think that's what those investors, those PE funds, those private investors have brought to the industry recently. And I mean, what SailGP has done with such a small team is the perfect explanation of that. And we were discussing with Mike. I think you told me you're 25 people in the team, and you're able to put together so much content, and you have people that are really motivated, having your brand out there, which is amazing.
Yeah, I mean, I think companies like Scoreplay are the reason why emerging sports have been able to take such a giant step into the mainstream. Like I said, we have a $10 million a year spend cap. If we had to have a team of people filming and cutting, editing, and putting out all this content, you'd need a team of 10 people doing that. That would be almost half of our team. But you can, partner with a company like these guys, and they have tools to just go in and grab the clips and recognize the faces and tag them, and can build a story for you, that would have taken 10 people 40 hours. And I think that's been, there's been a lot of questions of why and how are these emerging leagues becoming mainstream, and the technology is a big reason for that.
Yeah. So basically you need real storytellers, because at the end of the day, monetization always comes from a good story. Then you need a very well-organized infrastructure, because that's not just true for sports. That's, if you want to leverage AI, you need everything to be super well-organized. So you need a CRM, and you need to know exactly who your fan are, and you need your media centralized in a good infrastructure. And the last element is, if you have both of that, then you can maximize AI in order to make all of that super scalable and monetize it at scale, and make those valuation possible, because that's at the end of the day what everyone wants. So
I imagine every team and league needs something like this, especially emerging sports.
Yeah.
Yeah.
Yeah. You have no chance without it.
Yeah, absolutely. This is a question for all of you. What does a well-capitalized sports organization actually look like from the inside? Beyond the check, what are the best investors bringing to the table? Start with you.
Well, I think, it's easy to have a great partner when things are great. When you have a great partner when things aren't great. And I think that's something that, that's a lesson that all of us could learn time and time again. And we have great partners. Avenue Capital are our private equity partners. They have a sports fund. The founder owned an NBA team. and won a championship. Took it from a $500 million enterprise to a almost $4 billion enterprise, and won a championship in 10 years. So yeah, I think you hear a lot about strategic capital. There's plenty of people that are willing to write checks, but a lot of the time those people that have the ability to write checks are also very busy, and so they don't have time to help you. So finding the capital that is more than just a check, believes in what you're building, and has the time or resource to actually help you, that picks up the phone when you call, that will open a door for you, that could, maybe a deal's on the finish line and a phone call or a text to a friend, goes from, just on the finish line to closed. To me, that's strategic capital in a nutshell, and it's really, really important.
So before I answer that question, just so you know, guys, you can amortize intangibles over 15 years and get a pretty nice deduction. So I'll stop on the tax stuff for now. But I think, like I said, we have a lot of clients who are owners of sports teams, and I think what they bring is passion, right? So we all kind of grew up as fans of different sports and sports teams, and when you have the capital to actually be a part of that ecosystem, and you bring the passion with you, I see them, to your point, Mike, about being active and proactive and helping you all. By the way, in the tax world, we love that because that converts passive losses into active losses, which means it's a much bigger advantage. And so we love to see that. Clients bringing enthusiasm and passion about the sports they grew up loving and bringing that to their investment portfolio.
I think one other thing that you just made me think of, I was at a sports conference a few years back, and there was a all-women's panel, and they were talking about women's sports, and an NFL player, retired NFL player, was in the crowd, and he stood up at the end and asked a question: how can we help women's sports? And at the same time, all three women on stage said, "Show up." That was the answer. And so I think we've seen in a lot of these, in the WNBA is a great example. All of a sudden, you've got Dwayne Wade and LeBron James sitting courtside, right? That's showing up. All of a sudden, the video cameras came. All of a sudden, it was on SportsCenter. All of a sudden, this league that had been around for 25 or more was getting, FaceTime. And so, back to investors that are going to show up for you, right? It's so important. Yeah.
No, I agree, and I think, as you put it, I think you have very different types of investors, and you need to know also what you're looking for and align interest as much as possible. For us, we started 5 years ago with zero experience and zero background in sports. We're totally new. We're based in Europe. And we had to penetrate an industry that is notoriously very closed. And so we used investors in order to open up the industry for us. And athletes are actually very good example of that. We have athletes like Kevin Durant, for instance, who we pitched. The idea was just to say we want to distribute more content to players at the time. And he was like, yeah, that's true. The Brooklyn Nets are sending me a Dropbox link, and I need to go through this link. And so it was this idea makes sense. He invested. 2 weeks after, we were working with the Nets because he made the intro. After that, he went to the Suns. The season after, we worked with the Suns. He called Giannis. He ended up investing. And little by little, those investors really helped us penetrate this world until we were big enough to start working with VCs, right? And Alexis Ohanian was obviously Reddit founder, but starting being more and more involved in sports. He started Angel City. He saw what we were doing for Angel City, his NWSL team, and he put a demo request on the website because he wanted to have his personal demo of the platform. And he has this seed fund 776, and after 30 minutes says man, this is amazing. What you're doing for Angel City should serve every single NFL team in the US. So he led our seed round, and he has this amazing software where you can ask for requests in his network. And he introduced me probably to 20 teams in the US. and now we are working with like a third of the NBA, more and more NFL team. It's like that's just the explanation of like how active investor on the cap table can make a huge difference for a company. But again, like you need to know what you're looking for at the very beginning, and like when they are willing to help, like they can make a massive impact on your business.
Yeah, absolutely. My next question is for both of you, because for those who don't know, US SailGP uses Scoreplay. So Vic and Mike, teams and leagues are sitting on a lot of content they're not fully utilizing. Mike, how are you thinking about building a more consistent content engine for US SailGP Team? And Vic, where does that start to translate into real business value?
Yeah, I think one of the areas that we're going to focus on is storytelling. I think that most of us in this room love sports because of the people that play them, and you aspire to be them, you dream about them, or whatever your thing is. A fan, in my opinion, is you have to exchange value with them, and they either love you or hate you. And either one as a fan, you would rather have the love, but the engagement is it builds momentum. And so for us, I think our league has built this amazing racing property, and now it's time to tell stories about the amazing people that race these boats and their hardships and their breakups and their good days and their bad days and their wins and their losses, right? I mean, that's the people like Kobe Bryant, right? We went on a journey with that guy, over his career, the ups and the downs, and I think that's sports in a nutshell. That's why it's so important. And so, we were talking backstage about how we can use his tools to help us storytell from broadcast. I didn't even know that was. I literally realized that was an option in the green room. And so, yeah, back to like finding efficient ways to be able to do this. We don't have the resources to have a 10-person content team following us around all the time. So yeah, I think that's our next big unlock is the stories about the people.
Yeah, and the distribution aspect is so important because at the end of the day, like you want to make sure sports, what differentiates sports for on the content side of things is the fact that it's authentic and it's super AI proof in the sense that probably within 5 years, most of the content we'll see on Instagram and like on social media will be AI generated. Sports by definition won't be. And so we need to leverage that as much as possible by having as much like real-time content available as possible, making sure that you create those stories that's in a very synthetic world. We'll remind ourselves that we're human. That's part of humanity. Like that's the good days and the bad days, as you said. Like that's what people want to see, want to consume, and you need to give them access to the stories. And what's amazing again with AI is that makes the production and the creation process more and more seamless. And so you need to make sure you use AI to accelerate the production, but you don't want to go like all the way to like fully automate your content. Otherwise, like you're losing the essence of what makes sports unique. And so that's finding the right balance between, again, leveraging those tools to create more, but keeping the authenticity of like sports content.
It has to be authentic, right? And it has to be unfiltered. The people that most of us follow in the world, whether they're business leaders or sports leaders or tech leaders or whatever they are, the ones that have the biggest followings, they're always true to what they believe in, right? Even if in the moment it's not the most popular thing. And I think that's important in all of this. Authenticity wins every time.
That's what we invest in also, right?
Yeah.
Mm-hmm.
And that's one of the things that is amazing with, we work with some of the bigger leagues and we work a lot with emerging leagues. And what we see with women's sports leagues, for instance, or like SailGP is like, they are, like athletes, for instance, are much more willing to share their stories because they are giving, a stage that they didn't have in the past and they want to maximize that. They want to be able to, use that to monetize their brand and like create their brands because they don't have like those monster media rights that are backing them. And so I think this is what makes also those emerging leagues like unique is how they are embodied by their athletes, by their owners. Like, owners are much more involved in like the emerging leagues than they are in like more traditional sports. And yeah, that's something pretty unique in that space.
Yeah. I have 2 more questions. A little bit of time. Lucy, new ownership models, minority stakes, funds, syndicates are changing who gets to own a piece of sport. Where does that go from here, and what does it mean for how leagues govern themselves?
Yeah, so I think we're watching a really interesting and fascinating phenomenon where we are watching sports as an investment be democratized, right? So we have now not just these billionaire investors, but also pension funds, retail investors that are alongside the other guys. So you're going from a model of 1 owner to 20 plus owners. I think all of this really means is that you have to really have more robust governance. I think ultimately sports teams will be run kind of like public companies, right? More board meetings, quarterly reports, the whole shebang. But I don't think that's necessarily bad. I think that just creates more accountability, transparency. Maybe that creates more opportunities, and maybe that's also a way to protect the athletes and give more platforms for storytelling that's genuine, right? And we talk a lot at my firm about human first, right? AI enables, but human first. So maybe that's another way to support that ecosystem further. And just so you know, Shayne, these 2 guys work together right now. We're going to all work together because they're going to hire Citrin Cooperman for their tax advice.
Absolutely. Okay, guys, so last question, and this is for all of you. If you could change one thing about how sport currently approaches institutional capital, what would it be? Start at the end. Start at the end.
I think investors that are entering sports have also to understand that it's a cultural product, and culture takes time to create. So when you're coming from like a tech background, you're expecting like super quick return. We're like speaking about like long-term gain. Like we're speaking about creating IPs that might take a decade or 2 decades like to really mature. And again, like speaking of how you need to make sure that you have like common incentives in like also like return, you need to like I do think that probably too many sports investors don't realize that they have to be here for the long term and not just here for like a quick return like in a couple of years.
Yeah, well, I think you're spot on, right? It is a long game, right? Yeah. And so I think, again, some of the tax strategies that we incorporate for like shorter investments and other things like qualified small business, those are not really great for sports. But again, I think sports is such a unique place where you can marry passion and lifestyle and, all the trifecta of investment opportunities. So if you have the patience, you have the enthusiasm, I think it's a great platform.
Yeah, I think you guys nailed it. I think what excites me the most is seeing all this capital come into sports. And, every tech conference I go to, you end up at a happy hour or something like that, and people that are way smarter than me talk about the importance of sports as sort of the last frontier that AI, will never, and now I saw that there were robots out there boxing, so never say never, replace us, right? Because we love that human connection. And, the institutional capital has realized that. And, there were a lot of big PE firms that wouldn't take my phone call in 2023 that have started, calling us now. And that's incredible. It's an incredible time to be in sports. And, every tech conference now has sports involved in it. Every lifestyle event has sports involved in it. And it's just a really exciting time.
Thank you all so much.